right, guys, welcome in. Welcome to tonight's live. Today is the 3rd of March. We're going to be going over a couple things on the charts with you here on tonight's live, right? So we usually start off with the indices, move on to metals, and then we go into Forex pairs, right? We're going to identify first a couple of red folder news throughout the week. Depending on the Forex pairs that you use, please be very careful trading the red folder news. I definitely do not recommend anybody that's not a professional, that's been doing this for years, who has been, you know, getting consistent payouts left and right, and it has pretty much nailed everything down to a science, not to trade red folder news, right? It's very tricky. Most of the time, it's pretty much like you're gambling. Yeah, sometimes you might win big, but a lot of times you're gonna lose big as well, right? So definitely avoid red folder news. Also, huge tip: whenever there is USD red folder news, just know that it will affect the entire market as a whole. So even if you're trading a foreign pair, such as the, you know, the pound to the yen, right? The British pound to the Japanese yen, still gonna get affected by USD news. I know, because it's happened to me. I learned the hard way. I don't want you guys to learn the hard way either. So just take my word of advice. Now, if you're like me and you're hard-headed, you'll probably learn the hard way as well. And that's gonna happen to you. Reflect on this. Try not to trade red folder news for now, right? So we're gonna go over it right now. Forex Factory, that's usually the calendar that I look at. That's what we're seeing right now on the screen. Sunday, tonight, we have nothing red folder, right? Looking good. Monday, we're looking good as well. Good news, no red folder. Tuesday, we do have some red folder news. We have USD, 8:30 a.m. Remember, these are Eastern Standard Times, New York session. This is the time frame that I use, and it is also the session that I trade. USD red folder as well, 10 a.m. Then we have Aussie dollar, 7:30 p.m. And then the Kiwi, which is a New Zealand dollar, over here as well. All of these red folder news on Tuesday. Moving on to Wednesday, we have USD here in the morning as well. And then that's going to be the only red folder news for Wednesday, surprisingly enough. USD just loves the red folder news. It's crazy. Thursday, we're looking at Euro. Euro all day, red folder news. Caution with your Euro pairs. Then we also have CAD, Canadian, and then USD, American dollar. You have CNY, Chinese yen, over here. And then Friday, we have, of course, we're going to have another red folder news for the USD. Alrighty, let's jump on the charts, right? We're gonna go into some NASDAQ for you guys real quick. Give me 1 second to change it over here on the Discord for you guys. Alright. We're gonna look at NAS on the weekly chart. I'm pretty sure you guys can tell what the bias is right now, right? We're still extremely bullish on the weekly. We've identified all these points leading up to the weekly. And if you've been on these live sessions with me these past few weeks, you're going to pretty much have a very similar chart to me with all these points of interest marked out for us to play out in, right? So for now, we are extremely bullish. I'm guessing that as soon as, you know, everyone gets their tax refunds right here in the United States, all that money is going to be flooding into the market. I would expect a dip in the market. At the end of the day, the market's going to do whatever the hell it wants, but that's what I'm expecting to see. That's what I'm projecting, and getting us into one of these like beautiful positions here, and then we're going to long them, and then it's going to rally some more for us as well. For now, weekly is bullish. Lowest time frame we're going to start doing is 4 hours. 1 hour is going to be mostly for your daily entries, but I want to identify our higher time frames, and we're going to stick to weekly, daily, and 4 hour. Right now we're looking at this on the daily. Remember, depending on your broker, you're going to see some slight variances when it comes to your price points. Right now I'm using the E-mini futures, right? So the futures brokers, if you're using something like, let's say, ACAP, it's going to be a little bit different, right? So for now, you know, prices are going to be a little bit different, but you're going to see pretty much the same candle structure, the same price action, and you can identify the same PD arrays, such as the order blocks, such as the fair value gaps. All that's going to be the same. Pricing, the actual pricing itself, the numbers are going to be a little bit different, and that's fine, right? Every broker varies. Right now on the daily, we do see this daily fair value gap here that we identified, and it tapped into it perfectly, right? So if you guys had your alert set for this, you were able to get in this one on Thursday. This is like textbook right here. 50% tap in and then continuation to the upside, right? We had this OTE, the optimal trade entry. I had that marked out as my target point, and it looks like it hit it, right? You guys saw this live last week. It's not like, you know, I'm doing anything tricky, no smoke and mirrors. We went over these points of interest last week. We've identified this order block underneath this fair value gap, which made it high quality for us and made me feel very confident in getting into this position, right? So if you were able to get into this and you had your alert set, this would have worked out beautiful for you. So what this would have looked like on a lower time frame, we're going to go over that right now. We're going to go into like the 1 hour time frame, 15-minute time frame, so you can see the entry. We're not identifying point of interest. Remember, lower time frames are for entries only. So once you get into something like this on the 4 hour or on the daily, and you're like, okay, we're playing in that area, this is our point of interest, we're going to be looking on a lower time frame to enter that position. We were bullish on this. This is a bullish fair value gap, so this is a bullish entry. Let's go down into like a 15 minutes so you guys can see a little bit clearer, from daily to 15-minute. Right, this is Thursday the 29th. Now what we're looking for, entries, right? We have 8 different entry models. I will post it here into the Discord right now. It is by Victorious. This was on his Twitter feed. I take no credit for this, but I definitely use this and I definitely recommend them. Right? So we're looking for one in specific. I am looking for a market structure shift, leaving behind an imbalance, such as a fair value gap. Right? So that's what we're looking in for. That's usually the most solid, especially when you're going in from higher time frame to a lower time frame. So you're gonna see over here, right? Market structure shift. Did it tap into it? No, not really. We're looking over here in the London session then. This is that day. This is the 29th. London session taps into it, and it looks pretty solid. Market structure shifts over here. Don't really see much of anything here. Now it looks like we did get some news over here at 8:30. Now you have a fair value gap. So now you have a market structure shift. You have your first fair value gap. This is the 50% mark over here. Let's verify, right? This is my 50% area. Now fair value gaps, how you get into them are, it'll be the previous candle that caused a fair value gap, because fair value gap candles are usually 3. So you have 1, 2, 3. You would put your stop loss beneath this, but just to be sure, extra safe, I would have put it below this. Reason being, that's the 50% mark of the daily. I would expect that to come right back into it because it is a higher time frame, collect more liquidity, and then push up. I wouldn't have expected this to be the only time it tapped into this 50% mark. So I would have just gone like this, right? This would have been my stop loss, just a little bit underneath that one, the wick, and then I would have targeted 2 to 1, which it looks like it would have hit London session the next day. 2 to 1. Let's see. Next day continuation. Boom, 2 to 1. But then when you look at it on the higher time frame, it went beyond that. It went 3.62. Right? So that's what we're looking at on the lower time frames. Once you identify a higher time frame point of interest and it's playing out in that area, use these 8 these 8 points of entry, right? Entry strategies while you're inside a point of interest on a higher time frame. So now for daily, this has already been mitigated, it's been tapped into. We're going to remove that so we can clean up the charts a little bit. And now we're going to focus on whatever else we have. We have this tiny baby fair value gap here that's on the daily. Honestly, it's so small. I probably wouldn't expect it to play out, but we're gonna mark it anyways. Maybe we can catch a nice little entry in there, like a wick into it on a news day with a continuation to the upside. So we're gonna label this and we're gonna tag it as well. We're gonna call it daily fair value gap. 50%, right? This is what we're gonna be looking into for entries. We're gonna set an alert on this one as well. Because from the looks of it, it might tap into this on like a news day and then continuation to the upside. But this is just a massive candle. It's insane, the amount of volume that's behind it. Right now we're forming a bearish candle. So we should be seeing a pullback. So I'm going to be drawing my favorite retracements. These are going to be my optimal trade entry points, OTE. And if you see, it overlaps with that daily fair value gap almost to the pip. So my 0.62, that's going to be like my first entry. 705 is my second, and then 0.79 is my third entry. Usually when used with confluences, they overlap with the fair value gaps or with like order blocks, right? Other PD arrays. For right now, not too much faith in this because it's such a small fair value gap, but it is a daily fair value gap, so it holds more weight. We identified that, we set an alert. We'll keep monitoring that once it taps into that area on a lower time frame. Besides that, I don't see anything else. This is a daily candle that's forming right now. If it closes at this point exactly, then all this is going to become a fair value gap all the way down into here. But I don't see it closing just like that. There's going to be some play over the coming hours into the next two sessions, London and New York. So we have to see how this forms out to really predict after that. But for now, the only thing we see on the daily is going to be this fair value gap over here. Let's go down into 4 hour. On the 4 hour, we do have a fair value gap, right? Let's label it. Let's identify it. And let's try to trade it. So from here to here, that's going to be the pullback. This is the halfway point. You're looking at 18,230.50. And then pardon me, I completely forgot to give you the coordinates in the previous one. This one I have on my chart, 18,024.25. Let's mark this. I'm gonna call you daily, 4 hour fair value gap, 50% mark. I'm gonna add an alert. Looks pretty solid. We're expecting this to come into here. Remember how I would play it is stop loss would be below the previous candle. So not this candle, but this candle, just to be on the safe side. Because if it breaks and closes beneath this candle here, then you're looking at a market structure shift. Then you're pretty much just changing your bias, right? Trading doesn't have to be too difficult. Don't make it difficult. If you see that the bias changes, then your bias changed, and that's it, right? If a trade doesn't work, it's because the bias changed. Now you're looking for shorts, and that's perfectly fine. Sometimes you might get liquidity raids when it comes to red folder news days, and it literally seeks sell side liquidity, seeks buy side liquidity, just seeks and destroys everything. That's why you don't trade red folder news. Try to avoid it. Now, what else do we see on 4 hour? Nothing here, nothing here. This is still in play. This is still in play, right? We're looking at 17,753. We're looking at 17,602.75. We're looking at those as our closest ones. This one to me, I feel like has way more weight and it's going to be more solid than the previous. Reason being, we have an order block right underneath here. If you're using EZAlgo and EZSMC, which is included with your pro membership, you're going to have all these order blocks automatically filled in for you. And you're also going to have this percentage indicator on the right side. The percentage indicator indicates how strong this order block is. So now you have a 40% strength order block with a fair value gap over here on a bias that's bullish. So it's going with your trend, right? The trend is your friend. This one looks really solid to me. I would be looking more for 17602.75 to fill my order, and I would feel more confident going into this position here than I would into this previous fair value gap. Now, that's not to say that this one won't react off it. It will definitely react off it, right? But this one's gonna have way more probability than this one. So we have identified both of these over here. I have a 1 hour over here fair value gap, 50%. We're gonna delete that. That's been mitigated, that's been tapped into. We're gonna focus on these two levels here, this level here in the daily, and we're also gonna focus on this 4 hour 50%. This is gonna be the closest one here. This one more than likely it's gonna get tapped into on London, if not New York session. This will get tapped into Monday. So be looking at this one, set your alerts. We're gonna be trading this one on Monday, and then hopefully as long as the week's going, we might be getting a retracement on the weekly and tapping into these points of interest over here, and then we'll be ready. We'll be expecting that, and we're gonna be trading that wisely, right? Now, guys, does anybody have any questions for me in regards to NAS, or any questions whatsoever? Questions? Let me get some thumbs up in the Discord. I'll move on to gold, and I'll also know that you guys are alive and actually listening right now. All right, cool. Oh, dude, you're in the perfect place. If you do not understand anything right now, tell me what you don't understand. We'll walk through it together.
The indicator, and yeah, I tried my first trade last night. I just lost $200, but that's cool. I'm still learning.
All right, so what I definitely recommend is, like, don't trade with real money when you're trying to get used to like a new strategy or a new indicator, especially if you're going to be basing your money off the indicator itself. Do some paper trading, do some demo trading. Now, in regards to the actual indicator itself, we do have a couple videos that Matt's gone through. It's very detailed, right, when it comes to like the actual settings and all that. Watch those videos, watch them every day until you feel comfortable and you know what you're doing. Now, the concepts that I'm going through right now, I'll try to describe them as simple as possible for you, right? We're looking for fair value gaps, which are usually what happens when there's enough volume pushing the price action past a certain point, and then that area is not contested before or after. Let me show you by zooming in a little bit further so you can see. We're going to keep it as simple as possible, and we're just going to be focusing on this, right, for identifying your points of interest. You see how this candle has all this volume here, and this price action moves it up. Now,
Yes.
you're also going to see here, right before the candle before this, what makes a fair value gap is the candle before and the candle after. This area here is uncontested because you have a candle wick here. So this little candle wick here applies to before and after. So then this area between this candle wick and the area between this candle wick, that becomes your fair value gap. That's what we're looking for on the market. That's what we're looking for when it comes to price action. Now, smart money concepts, which is also known as ICT, Inner Circle Trader, SMC, smart money concepts, focuses on things like these, right? Meaning that there was institutional money, or there was quote unquote smart money moving the market that leaves an imbalance behind. So it has to come back, tap into it, retest on the 50% mark, collect more liquidity, more volume, and then continuation of the trend. That's what we're looking for, right? Especially with a higher time frame. So you can see it in motion here. This is previously, right? Wick after, and then the wick before. This is our fair value gap, right? Trend is your friend. We're trending bullish. This is a bullish fair value gap. This is your 50% mark. And then this is kind of like what we're expecting the moves to be for all of the points of interest that we identify. It's not going to be 100%, but it's going to give you the best probability of getting a winning trade. So this is textbook what we're looking for. So just learn little by little. We'll go through all this together. If you need a little bit more help, just review the videos. I'm also going to be posting a video here that has the smart money concepts, pretty much like a 30-minute video going over each small concept behind smart money concepts. And what I recommend new traders to do, and what I recommend every trader to do, is watch that video every single day before you even open the charts. Get familiar with those concepts and then go into the charts until you get to the point where you don't even need to watch the video anymore and you don't need the indicators anymore. You can see it just on the charts, and that's where you want to get to. That's what I had to do, and then that's what I recommend for everybody. Now, the reason I have the indicators active here in the chart is so you guys can see a little bit better as we're going through this together. So now I'm going to move on to gold for you guys. So this is what gold is looking like. Let's go on weekly. So on the weekly, I did identify that we are ranging, right? So we're ranging between these 2 points here, between this fair value gap here and then over here, which is the top of the candle, which has not been broken through this past week, which is amazing, right? So this area here, I put as a ranging area. Right now we are bullish. Continuation. We tapped into this fair value gap here. And it's still solid because look, the bottom wick of this candle that created the fair value gap, 50% didn't go underneath it, but we're always looking at the candle before. So nothing's really tested anything in this area here. This is still really, really solid. We're still bullish. Weekly, bullish. Let's go down to daily. Sorry if the charts look a little bit messy. Just bear with me, okay? On the daily, it's going to be a little bit cleaner. This is the range I identified. Top of this candle. And then over here. We are looking at gold right now. Your broker numbers might vary a little bit. I am looking for, right? We're looking at a double top. I am looking for an entry as a short here. Reason being is that I label this area here as an area of point of interest for shorts. We are past that now. We are an extreme premium. So I'm looking for shorts. We broke through this buy side liquidity. This is no longer valid. If this closes out the way it is right now, this is going to be forming a huge fair value gap here, and then continuation to the upside, and then it could probably just be seeking this all-time high here. We're going to mark this. Let's verify this has been our all-time high, and yeah, that's our all-time high. We're looking at 2134.52 as our all-time high. Let's label this as well. Right now we're hitting all-time highs on a lot of things, right? The market's been very bullish, very aggressive, but in a good way. Gold has been hitting all-time highs. NAS has been hitting all-time highs. If this closes out, candle body above here, we should be seeing gold seeking to tap into this area here in the 2134.52 all-time high. It's just going to be seeking that for liquidity. Now, if this closes underneath this, I'm going to be looking for a short bias. But we'll see as the day goes on for tomorrow how the market really treats it. Also, during times of war, gold is very bullish. Macroeconomics are pushing it to be bullish. We have a lot of things happening right now currently. Israel and Gaza, then also the Houthis hitting the trade ships, causing a lot of increase in logistics when it comes to products. So there's a lot of things affecting right now. So gold is very bullish because of that. Let's go down into the 4-hour. This is going to be looking like our entry. Right? So remember the fair value gap? This is the fair value gap. It tapped into... Yeah, it tapped into the 50% mark, went a little bit lower, collected liquidity, continuation to the upside. Honestly, guys, if you trade just the higher time frames like the 4 hours and you're patient, you're going to get some really good moves. So for example, let's say you're here. Your stop loss is going to be the previous candle low. But in this case, that candle is a little bit higher than the wick of this candle. So we're going to go to the lowest point. We're going to target 2 to 1. And it happens in the same day. Right? If you're a day trader, it happens in the same day. You don't have to scalp it. You don't have to scalp entries. Literally just look for 4-hour entries and you're good to go. Same day. Like if you're going in like 2%, whatever, on a 100K account, that's $2,000. And you don't have to be stressing yourself out, right? That's the beauty about these prop firms. Fair value gap over here. We're going to mark this out as a fair value gap. Go to the candle body and then the candle wick. I have this already marked out too. This is a super important zone for me. So 2071 was a very important zone for me because that was a fair value gap. Let me show you guys what I was seeing. This was a fair value gap that needed to be filled, but now I broke through it and created a bullish fair value gap. Right? This is my 50% mark on the 2071. So now that fair value gap becomes an inverted fair value gap. So instead of being bearish, now it's bullish. And now you have a double confirmation. I like it a lot, right? For me, when it has a fair value gap that becomes an inverted fair value gap, that just gives me added confidence and gives me more confidence as well that it's going to have a lot of volume behind it. And that's pretty much overlapping with this 50% mark, right? That's a nice little confluence there. The 50% mark of both of the fair value gaps is pretty much on the same level, give or take just a couple of pips. So this right here, we're just going to move this down. I'm going to delete this 2071 line. I'm going to label it on the 50% mark. It's going to be called 4-hour fair value gap 50% mark. This is going to be our point of entry. This is probably going to hit in London session. Might not even make it to New York session, but we're going to be watching it. So for my London session traders out there, this is going to be nice for you. Now I could also close underneath it and then become bearish. And then become an inverted fair value gap again. But we're going to be watching that closely. That's going to be our only entry right now when it comes to 4-hour. So watch that very, very carefully. Besides that, on the 4-hour, and by the way, the coordinates for that are 2070.41. On the 4-hour, I don't see anything else besides this over here. It's a little bit lower and it's sitting over an order block as well. 35% chance. This entry is at 2009.92. You can just round it up at 2010, right? This is a 4-hour and also a daily fair value gap 50% mark that both overlap. So there you have 3 different confluences. You have a 4-hour fair value gap 50% mark. You have a daily 50% mark overlapping, and then it's also sitting on top of an order block. You got three confluences right there. Now, if you're looking left, it's also become an inverted fair value gap. This was a fair value gap. Now we're looking at this fair value gap. This little area here has been uncontested completely in 2 different instances with 2 fair value gaps. All right. Look left a little bit more. You're also going to see some structures forming. Here's been rejected off it. And then wick, wick, wick. 1 candle body, wick down, and then fair value gap. All right. Pretty good structures. There's a lot of volume in this little area here. And a lot of movement because of this area. So I feel very confident that we're going to see some nice movement off there as well in the future. Besides that, I don't really have anything else on the 4-hour that I'm going to be looking at in the short term. Guys, make sure you mute your mics, please. Yeah, that's pretty much it for gold. Weekly looks like we're still bullish, but we might be seeing a pullback. Daily 4-hour, we're looking at a pullback, but we're still mostly bullish. Does anybody have any questions for me when it comes to gold? By the way, welcome in a little bit. I'm seeing a lot of new faces on Sunday. It's good to have all you new joiners. We do these sessions every single Sunday night, so please join us. Next Sunday night, it's going to be at 8 p.m. I'm pushing it back a little bit because I'm noticing more traders are joining us a little bit later in the evening, and that's fine. But I wanted this to become a habit for you guys too, so you guys can get into the habit of, you know, going on the charts before the week starts and then knowing already what you need to do when you get to those points of interest. Instead of just trying to find and overtrade a point of interest or an entry every single day, you already know what to be expecting. So that saves you a lot of hassle right there. Guys, are we good on gold? Can I get 2 thumbs up and then we'll move on to the next Forex pair? It's going to be Euro USD. Dope, dope, dope. Thumbs up. Guys, if you have any questions, please, as well, feel free to ask questions. All right. Euro USD. So I drew all these OTEs, my optimal trade entries, my fibs. Looks like it tapped into it. Now it's going to be moving beautifully. I was expecting it to ping pong in here, right? Bounce back and forth on a daily, on a lower time frame. And I do see the conditions for it to seek and destroy over here. Tapped into here into my 0.62 and then continuation to the upside. So for now, I am bullish. Right, structure came down, hit here, and then came back up, forming higher lows and forming higher highs. I do expect some movement here, and then this is going to be our deciding factor whether we're forming new higher highs or whether we're going to be getting rejected completely, and then it's just going to seek this area here. What I'm doing is I'm looking for when price action comes into here, and then it's still going to be mostly bullish for me. Looking for price action to come over here. That's going to be my real point of entry. At the moment, I'm looking for whatever this is forming to give me a good entry, short bias to go into here. So that's what I'm looking at on Euro USD. I'm looking for a clear path, a clear entry, short, bearish, to go into my daily 4-hour fair value gap here at 1.05985. Right? So I'm still bearish by the way the structures are. I'm bearish on the lower time frame. On the higher time frame, and by higher I mean like weekly, monthly, it's bullish. So drop into here and then continuation up. Let's go into daily. Daily might look like it's doing its thing. As long as the candles don't close beyond this fair value gap, this is still solid. So this might cause, who knows what it's going to cause, but as long as these candle bodies don't close above this fair value gap, it looks like it's still holding. And then we should be expecting this to go down into this area here and then come right back up. Where you at? So like, that's what I'm expecting. This has been tapped into and mitigated, this fair value gap here, so there's nothing really holding it back at that point. So to probably just seek this next market structure, which is right up here. Alrighty. And then we have here a 4-hour fair value gap. Yeah, it might just ping pong off these two different points of interest for now until we find a nice entry point short into here. What's up with the 4-hour? What's the 4-hour say? You see here, only wicks, no candle bodies closing beyond the fair value gap. Fair value gap is still holding. It's very sweaty, but it's still holding, right? So if you're in this position already, you're probably sweating your ass off, and that's fine. You just gotta let it play out. You have a fair value gap over here on the 4 hour. We will identify that because we should be seeing some price action happening, even though it's ping-ponging. And the funny thing is, like, this looks like the price action that usually happens to me when I get into a really nice entry. It'll just consolidate, and then I'll freak the fuck out, and I'm just like, this shit's going really bad. Let me get out of it while I can. And then in the next candle, it just destroys my take profit. I'm just like, I'm an idiot. I should have just let it play out. So yeah, just expect, you know, price action is gonna do whatever the hell it wants. And if your bias is good, your strategy is good, your win rate's good, you know, your target risk to reward is good, then just let it do its thing. And if it loses, oh well, boohoo, move on to the next one. If you're profitable, your win rate's good, your risk to reward's good, you got to take the losses before you get that dub, you know, before you get that streak, that winning streak. You got to go through a couple losses. That's fine. That's part of the game. Be a good loser, that way you can be profitable, but be smart about it. Trade in the points of interest. This is on the 4 hour. We're gonna label you as well. 4 hour fair value gap, 50% mark. And just be mindful, right now we're ping-ponging, we're consolidating, we're playing inside the fair value gap. I'm not extremely bullish, could be, you know, but take your wins on the lower time frames as soon as possible, as long as you're trading inside this range here. Now that is at 1.08281. Let's just look at the 1 hour. I'm not gonna mark out anything in the 1 hour, but yeah, it's ranging pretty good. But yeah, so my bias is gonna stay the same. As long as we're in here, we're ranging. I'm looking for a bearish bias. My real entry is gonna be over here, but in order to get here, I'm looking for something to form to switch the market structure, you know, the MSS, market structure shift, bearish, to seek this area here. So I'm still bearish in the lower time frame, and by lower I mean like 4 hour daily, in regards to like the weekly and the monthly, because Euro USD is still very, very strong. Now guys, does anybody have any questions for me when it comes to Euro USD? Let me get some thumbs up in the chat. We'll move on to the next pair. Next pair will be, you guys name it. Let me know what pair you want me to go over. Hell yeah, that's what I like to see. Let me get a pair from one of the new people that joined us tonight. We'll go over your Forex pair. Let's see if our biases are the same. Let's see if we find identical, you know, points of interest. Let me get 2 Forex pairs. Those are going to be the last 2 Forex pairs we go over for the night. Let me get 2 Forex pairs, guys. Come on. I know you guys have some interesting pairs on your charts. Yeah, some of you guys trade like really exotic stuff. I see Mozzie typing. It's probably going to be a Canadian pair. Don't hit me with a Canadian pair, bro. How did I know? You love those Canadian pairs, dude. Is it going to be USD CAD? I think I only pull up USD CAD because of you, honestly. Because besides that, Euro CAD, okay, I don't even have them. The only CAD pairs I've had here are pretty much requests, because I blacklisted all the CAD pairs. Let me add this, Euro CAD. That's fucking exotic. To me, anyways. I don't like CAD. I don't even have any drawings on this. Alrighty. Dun, 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 dun. Wick Master 3000. Honestly, this looks like a range on the weekly. Alright, so I'm gonna isolate this area here as my range, basing it on the top of this wick, basing it on the bottom of this wick, and just seeking each as it's going. Let me change the opacity, the visibility. Let's keep it to like 4. All right, weekly ranging market. Ranging markets are not really good because they're not very clear, but they could also be good just to, you know, short the premium and then long the discount zones. So as you see right now, that line represents my 50% mark. Whenever price action is above it, we're looking for shorts. Whenever price action is below it, we're looking for longs. Short and simple way to trade in ranging market. A lot of people wouldn't recommend trading a ranging market because there's no clear direction, but if you were to look for shorts here, look for longs here, right, until it breaks through one way or the other. Let's check you out on the daily. Honestly, look, I missed this little fair value gap. Here's a fair value gap on the weekly. Let's identify that, and we're going to use that. We're going to use this weekly fair value gap to target this market structure here. Take profit 1, market structure here, excuse me, the top of the range. That's going to be your take profit 2. Let's identify this. Coordinates are 1.45800. We're going to label this weekly fair value gap 50%. We'll see what happens. I'm going to extend that as far as possible. I mean, there's fine. There's fine for extending it. What a fat range. It's insane. This is actually a bearish fair value gap here. That's funny. And shit's just ping-ponging. This is why I don't like CAD. It's annoying. This is a bearish fair value gap 50% mark. Let's label that. This is on my weekly. Weekly fair value gap 50% mark. Coordinates are 1.48053. I mean, we're ranging. So if it hits here, we're targeting here. If it hits here first, we're targeting up here. Short and simple. For now. Let's go down into the daily. Daily looks pretty much the same. This is overlapping with this. That fair value gap overlaps with this fair value gap. So we're going to also label a daily slash or comma weekly fair value gap. So it's a daily and a weekly fair value gap. Over here, what do we have? This one just remains as a weekly. And that's fine. And then besides that, there's nothing really else besides this over here. There's going to be a fair value gap on the daily. And then it's going to be right here. Color you blue because we're bullish. Your daily. Daily fair value gap 50% mark. This one's looking at 1.42964. Remember, brokers could be a little bit off I'm using black bull markets for this chart over here. All right, cool. We're gonna keep it like that. Let's see if we see anything clearer on the 4 hour. What do we see on the 4 hour? 4 hour, nothing, just noise. Here's some fair value gaps here, but it's already been tapped into and mitigated. Yeah, I don't really see anything clear on the 4 hour. This over here overlaps as well though. This is a fair value gap here. Overlaps to that daily and weekly. This one looks really solid. Let's mark that as well. 4 hour. So now it's not just a 4 hour, it's a 4 hour daily and weekly fair value gap. That one's more solid than the one below it. So it looks like more likely than not, price action's gonna retrace into here, get liquidity, tap into the bearish fair value gap, and then completely dump and go through all these market structures. This bullish one is not as strong as this bearish one, but we'll see what happens, because you still have a market structure shift that's bullish. But remember, we're in a week in a ranging market, so either way it's still ranging. How do I find my buy side liquidity and sell side liquidities is the question. So I really don't use it, but buy side liquidity is literally just the top of the wick and the bottom of the wick. That's it, of the market structure that you're currently in. So these would count as like my internal liquidities, and then the really like far out ones are external liquidities. It's like that. The furthest out ones are external, and the ones towards more inside are therefore inside liquidity. For liquidity as well, I use EZSMC. EZSMC shows you your buy side liquidities and your sell side liquidities automatically, or you can just mark them out, right? Look at your wicks within those ranges, the most recent price action, and then just use your tools and then mark it out yourself. That's what I used to do before EZSMC was a thing. I'll do sell side liquidity, SSL, or I'll do buy side liquidity myself, right? BSL. Does that answer your question, Mind Power? Now for EZSMC, you should definitely use the indicator. We have it over here. I'm posting the link in the channel right now. It's on the free indicators, EZSMC, Smart Money. It is fantastic. It is a great indicator for you guys just to train your eyes. Now, does anybody have another Forex pair for me? We're going to do one more Forex pair before I go for the evening. Let me see one more Forex pair. If not, then I'm going to do Zimbabwe dollar with the Russian ruble just to troll you guys. Yeah, exactly. Give me a Forex pair. Or I'll do the Chinese yen with the Paki dirham. Don't test me. You know what? Let's do Aussie USD, because my boy's really been killing it lately with this. Oh, this is a fucking good area too. All right, guys, look, looks like we're playing out in the zone, and it looks like we're still early too. This is Aussie USD. This is Australian dollar and USD. Guys, look at this. This is a daily 4-hour FEG, and it tapped into it almost perfectly, right? Just a couple of pips. This is the first entry right here on the 4-hour, followed by this daily 4-hour fair value gap that overlapped. Right now we're still early. This is on the weekly chart. You guys are watching this live. We have a fair value gap over here on the weekly. That's a bearish one. It looks like we're targeting that. So that could be our take profit right there. That could also be our point of entry as a short, right? So we're going to label that. We're going to mark that out. Remember, guys, if you get a Lamborghini out of this, just I want one in blue, okay? That's all I ask for. I'm a size large in Lamborghini blue. Right, we're gonna label this red. This is gonna be a weekly fair value gap. This is a very strong level because we're talking about weekly levels. Weekly fair value gap 50% mark. Boom. Set an alert on that. What's the coordinate? Coordinate is 0.67578. We also have another fair value gap over here. That coordinate right there is 0.66348. This is another weekly. Weekly fair value gap, not fair gap. Right? Tap into here. Tap into here. Come back down. What's the weekly look like? Trending down. Look at these market structures. We can also do a clear indicator from this candle wick all the way down here using the candle bodies. This could be a trend break as well. This could be very, very important here. Right? This could be very, very important. So for now, we're going to be observing it like that. Daily, what do you look like on the daily? Daily is pretty much the same thing. This weekly overlaps to the daily. We're going to mark it out as such. We have something here that was marked before that's tapped into, and that's mitigated. Here's a fair value gap over here over this weekly. That's a daily as well. So those two are overlapping. This is inside this one. And that's good. Look how clean this is. This is a daily and a 4-hour fair value gap. That was our point of entry right there. Missed it just by a couple pips. And that's fine. Let's see what this looks like on the 4-hour. On the 4-hour, that would have been sweet. Boom. Fair value gap there, fair value gap there. Then you have another fair value gap over here. You would have caught it here. And then continuation to the upside. 2 to 1 would have been easy right there too. This would have been the point of entry for you, because you would have been setting a position here, here, and missed, here, and missed. Here, you couldn't do it because that's not a fair value gap. Here is a fair value gap. This would have been your position entry. Target 2 to 1. What do you got on the next day? Overnight. Beautiful position. This looks beautiful right here. Let's identify this. This is a 4-hour. Let's color you blue, and let's also label you as 4-hour. Fair value gap 50%. Like I said, folks, we're so early. I would set your buys here and then target this fair value gap here, 0.66339 or 0.66350 from here. But that's what I'm looking at, right? So we've identified the weekly levels. 1, 2. Those weekly levels also have daily fair value gaps that overlap inside them. Gives you an additional confidence. We are playing out this right now. We identified these as bullish fair value gaps. It did tap into them, and it is playing out the price action the way it's supposed to. This might take some time to play out fully, but it looks like we're so early. On the 4 hour, it looks like we have a position that's available that's coming up, this point of interest. For us to get back into this position and then continuation to the upside to tap into that. We'll see how it plays out, but that looks pretty solid. My boy's been trading a lot of Aussie USD lately, and it's been working out very well for him. He usually does a higher time frame. Entries on the 4 hour, lets him play out, takes a day or two, collects his money, makes very, very good risk to reward off it, and he makes a very good win rate off it as well by sticking to those high time frames. Now, guys, does anybody have any questions for me when it comes to the Aussie USD? Looks like we're good. Before we go for the evening, any other questions whatsoever to do with trading? Can you recommend a broker for me? Because I live in the USA. So, dude, like right now, it's a nightmare when it comes to brokers for us, when it comes to Forex. There are a few that are friendly with the US. There are regulated brokers. So you have your Owanda, is what I usually recommend. Forex.com also for US brokers. There is also Interactive Broker, IB, that we can use in the US, but that's about it. I have dual citizenship, so I use my Forex accounts under a different citizenship. But for US traders, we're pretty much stuck using regulated brokers. Unregulated brokers, there are a few, but at the end of the day, they are unregulated. So from one moment to the next, your money could disappear. So it's very tricky. It's a weird time that we're in right now. Yeah, so I mean, do your own research. Just really dive into like researching the brokers yourself and trying to figure out what works. But for now, just stick to regulated in the US. There's only like 3 options pretty much. Owanda is the most popular one. It's the one that pretty much everyone knows as the US broker for Forex. Yeah, check it out. Leverage is only like 30x, but at least your money's safer. For Traders Prop Firm, I haven't seen that one yet. So the one I really went into was funding pips, because they used to be backed up by a regulated broker called Blackpool, and they're regulated in the UK. So I was like, okay, this is a very safe broker, I'm gonna stick to it. But then MetaTrader pulled the license because they didn't want anybody from the US using their services. So it's kind of tricky to choose a prop firm at the moment. Now, if ForTrader hasn't had their license removed yet, I'm not going to jump on them, because 8cap is going to get their license revoked everywhere soon by MetaTrader, and MetaTrader is still going out after every other prop firm. So the only ones I would say to even mess around with are the ones that have already gotten their license removed and they've gotten it back, or the ones that got their license removed and are on different trading software platforms after that, because they're coming. MetaTrader is coming for everybody. So if they still have their license and they haven't gotten revoked, they're coming for them eventually. That's how I see it. Yeah. Okay, then that's good. Then that means it. Yeah, you can definitely check them out now, because MetaTrader just removed everybody. They're going after everybody, but I'll definitely check them out. There's also the 5%ers. The 5%ers have been around for forever. FTMO, if you're not based in the US, that's been around for forever too. That's the safest. That's the OG. That's the one that started all the prop firms pretty much. And yeah, I mean, prop firm matches usually has some good stuff, but yeah, the 5%ers and FTMO, those are like the OGs right there. At the moment, Funded Next is like super highly rated, and also Funding Pips is like super highly rated. There's also Alpha Capital. Alpha Capital has their own broker software based in the UK, I think it is, right? They're based in that area, and I've heard good things about their spreads and all that. Anyways, guys, looks like that's it for me tonight. Thank you all for joining us. We'll be here next week, same time, same place. Well, different time actually. We're gonna be here at 8:30 instead of 7 at 8 p.m. instead of 7 p.m. Eastern Standard Time, New York session next Sunday. And we're going to be moving forward with the later time at 8 p.m. It's been a pleasure to have you guys here tonight. Welcome to all the new people that have joined us this evening. We'll be back here again next week. Throughout the trading week, if you have any other questions, feel free to write them down. We'll go over them on the next week's live. But in the meantime, have a great, profitable trading week. And thank you so much for joining me. Goodbye for now. Take care.